notice is the following: the United States is inching closer and closer and closer to a day where we're going to issue gold-backed Treasury notes. We're going to issue gold-backed T-bills, or and the smoke is pretty much everywhere. And you can watch all of these central banks pushing towards buying unbelievable amounts of gold. Why gold is now trading at $4,200 an ounce. Bitcoin is also a form of pristine collateral. You can hear that from Scott Bessent, who says buying Bitcoin is good for America. And then right after he said that, Bitcoin comes under massive attack. By the way, like literally 48 hours later. Now, we could argue that Scott Bessent is the one bombing Bitcoin in order to be able to scoop them up and buy them cheap. I'm not sure that that's actually the case, but one could make any number of arguments as to why Bitcoin is currently is under ridiculous levels of attack. There's a lot of cold wallets being, amplified or hotted up, and Bitcoin is being sold that haven't moved in 10, 12, 13 years. All sorts of weird things are happening right now. But regardless, just in a high level, kind of 30,000 foot overview, in order for the United States to actually pull off what it's talking about wanting to do with the Genius Act and with these stable coins, there's going to have to be pristine collateral underneath, especially if the United States is trying to move away from a income tax pay the vig system of the old British system of we are going to tax our people through the government at the point of a gun to pay the foreign creditors the interest of the foreign creditors who invested in the country through the treasury bonds. We're changing the mechanism by which those are being issued, and they're being issued based on the demand for capital by the actual consumer and or nascent producer, the one who actually wants to build a thing, be it a small factory, a tire shop, whatever it is. That's where, because consumer credit, especially in the United States, remember, 70% of consumer credit comes from the small and regional banks, not the big banks. The big banks are the ones trying to figure out how they get to stay in the monetary transition game. Meanwhile, the Genius Act is trying to put the power in the hands of the regional banks who can issue their own local stable coins, and the profits off of the loans that are issued from those stable coins will stay in those communities.
Yes,
and that's the partnership.
Yeah, so I do think that's true to that.
Miles, one second. And Tom, that is something that you talk about in your market reports, and I do recommend people check them out, tomluongo.me, and also have the links to you, Miles, as well. So do you want to take your time, Miles, to respond to some of the points that Tom has made?
Yes, I do think there's truth to what Tom was saying regarding the community banks, because that's long been a strength of the American economy, and will continue. Well, they need it to almost continue to be so, because there is this complete bifurcation where Europe is just being bypassed and forgotten about. Meanwhile, you have all of the China and the BRICS doing what they're doing. They're building their physical collateral base. They're also experimenting with stable coins in Hong Kong, which are currently piloting and backed by US Treasury debt as well, which is another interesting side of this too. So yes, I do think that's true, because I think it's intended that America will continue to actually do pretty well. And I see that as a very reasonable outcome. I think longer term, what we're going to see in the United States is going to be tokenized bank deposits, because they want to protect their retail banking system ultimately. So there's currently a pilot in the UK for tokenized bank deposits. They've also announced that they're going to introduce sterling stablecoins in the UK.
That's it. Now that's interesting.
Now, they're not going to behave in the same way that American stablecoins or something like Tether is. They're going to be much more highly regulated. The reserves are going to be held at the Bank of England, but they're going to be off the Bank of England's balance sheet, which is very, very interesting, I think. I think...
I noticed that, Morgan, right? And I know this much about banking compared to you guys. Please carry on.
So JP Morgan has also been experimenting with a tokenized deposit for its institutional clients, I think, under Kinexis it's called. And so it does seem to me as if they want to make sure they protect their retail banking system, whereas in Europe, they're not so worried. They're more focused on like central bank digital currency, which will almost be held by the banks. But you can imagine a crisis that people are not going to feel confident, because it's a central bank liability, whereas tokenized bank deposits are a liability of the retail banks. And so that means you still get your FDIC limits in terms of your consumer protection. And so, yeah, I think they are really looking out for the US banking system very, very carefully. We've already seen SVB Bank, of course, blow out as a result of duration risk on the bonds that they were holding and the risk of holding to maturity. So, yeah, I think it's very interesting times. But ultimately, what all of these nations are doing is working towards what the BIS call a single unified ledger. And that single unified ledger will consist of central bank money. It will consist of stable coins. This is true of the UK, certainly, and likely, I believe, the US. Tokenized bank deposits. Then it will also consist of tokenized government debt. And what I find fascinating about all of this is that they want to ensure that there's singleness of money across the board here. So ultimately, what that ensures is that there is that par value between a stable coin, between a tokenized bank deposit, between central bank tokenized central bank money, as well as tokenized debt. And so what that would mean ultimately is that if you open your app on your phone, you'll see your digits, your account balance, but that will then consist of a variety of tokenized debt, central bank money, tokenized deposits, as well as possibly stable coins. And you won't know unless you actually really sort of dive into the app. So I find that absolutely fascinating, because what that generates is ultimately almost like a closed self-financing ecosystem for money. And Larry Fink, I put a little clip out of Larry Fink, what he was talking about there. And he said something about that they want to make sure that people stay in their digital ecosystem. And he was talking at the time about cryptocurrencies and getting $4.1 trillion worth of global money held in cold wallets into their ETFs and so on, which will all, of course, be tokenized.
Yeah, no, I worry about all that as well. And here's the thing for me that I will say, I don't think that anything the BIS has to say about the United States going forward means a damn thing. I think we're done with the whole BIS, IMF, World Bank.
This is where I really hope you're so right again.
I think this is the dividing line. That this is where we get into Davos, what I would call Davos, versus sovereignty. And I think that's where we're headed. I think we're absolutely headed. It's going to all look very similar, and it's going to be easy to mistake one versus the other. But with the amount of wailing and gnashing of teeth and the amount of hatred being spewed at the Americans for doing what we're doing right now tells me the old architecture, the old post-World War II Bretton Woods architecture, is very, very angry about what the United States is doing right now. My heuristic is who's ever squawking is getting their ox gored, and they're the ones losing. So they shut down our government for 45 days for no reason whatsoever, other than to slow down the relisting of Fannie and Freddie to get the 30-year government-sponsored mortgage back into the marketplace, which Obama fundamentally stole from us with the help of City of London. When I go back over 2008, I did this last month for the newsletter, and I just did a thought experiment. I just looked at everything that had happened in 2008 and the timeline of events. It was very clear that the whole purpose of the financial crisis and AIG issuing CDSs versus CLO, CDS insurance versus CLOs, all of this nonsense. It was all designed, along with the Community Reinvestment Act, the destruction of Glass-Steagall. The whole thing was designed to destroy the government-sponsored 30-year mortgage that we have in the United States. Because what does that do? One, as opposed to having a treasury market, right? The treasury market is effectively underwritten by the entire the U.S. housing market is entirely, the risk is spread out and pooled across the entire society, as opposed to the individual banks taking on the term risk of anybody's mortgage. Like I said earlier, the banks don't want to take on a fixed rate 30-year liability because the business cycle is only 5 years long or 7 years long. So it makes, and I don't blame the banks for not wanting to lend that far out on the yield curve, right? I don't blame them whatsoever. This is why what FDR did and again, I'm no fan of FDR, but in this respect, he was right in doing this by creating the government sponsored mortgage, which eventually was able to push us out into the 30-year term space. It gave the middle class the cash flow necessary to build wealth over and above at a higher rate than their mortgage was. So their mortgage, because the whole system had pooled risk, and in general, the risk the rate that everybody was paying on their mortgages was a lot lower than it would have been in an unregulated market. All of a sudden, the opportunity cost for taking that money and using it to build a small business locally that could throw off 7, 8, 9, 10%, as opposed to when they're paying, say, a 6% mortgage, or even better, a slower business. It only pays off 6%, but you only got a 3.5% mortgage. That 2.5% is all that matters. Why would you pay your mortgage off when your business throws off 6%? Your business growth and your business cash flow stream is what's paying your mortgage. That's how we built wealth, and that's how we built the middle class wealth in the United States. Honestly, that's how we had the middle class cash flow to fight World War II. That's how we had the middle class cash flow for the Marshall Plan and all of it. But what wound up happening over time, of course, is that the rise of all those dollars going overseas and then being in the unregulated Eurodollar space, now you have the Federal Reserve trying to regulate dollar flow domestically when more dollars are flowing around the world internationally. They're being priced in the offshore markets at a rate that makes sense for the offshore markets, and it robbed the United States of its own domestic monetary policy ability. The Eurodollar future system literally destroyed the Fed's ability to prosecute monetary policy on behalf of the American economy, which is why we wound up in Triffin's paradox, or Triffin's dilemma. We wound up having to tax more, deficit spend, send the currency overseas, send currency out, get goods back. We've already gone through our colonial days. We don't want to do this again. We want to reindustrialize and then send goods out, or build goods for ourselves, and not be sending currency out around the world. In the interim, there's going to be how do we de-dollarize the world while re-dollarizing at the same time? That's the trick. And the Stablecoin Genius Act, the goal there is exactly that. Look, the T-bill market is stable, and if it's underwritten by the gold reserves and or the Bitcoin reserves of the United States, then it's a good form of short-term collateral to undergird those stable coins. The U.S. dollar becomes the unit of account, not necessarily the medium of exchange anymore.
Okay.
And that gets us out of Triffin's dilemma and allows countries to then start doing the exact same thing, and they can win. And eventually, you can wean yourself off of dollars. That's what I think is going to happen. But that's a 40-year plan. I'm talking about like the next 3 to 5 years.
Okay, I'm going to come to you in a second, Miles. But something just went clunk there, Tom. And forgive me that it's taken so long to go clunk.
No problem.
Right. Which is that, so what you're saying that Trump is doing is replacing the current USD system, which is undermining US monetary sovereignty, and replacing it with a new stablecoin-based system, which allows them to assert sovereignty over the price of the dollar.
Yes, domestically.
So they're
domestically, and then let it float,
right? And then people
overseas, it's going to float based on market demand for the dollar. And the Fed's job is to make sure. I think the Fed's job in the future is to ensure that float rate is always slightly higher than the domestic rate. So you defend the international par value of the dollar by leaving, and then over time, the Fed gets out of regulating the Treasury market and gets back to its original role, which is to backstop the commercial paper market. Because ultimately, in the long run, we would like none of this to be backed by U.S. Treasuries. We want it to be backed by domestic commercial paper, because that's a real proxy for the health of the domestic economy. We don't need the Treasury debt market to do this.
Which ties into what you and I talked about, and I think agree on, that Trump's out to destroy globalism and bring in, and the influence of the City of London, and bring in the American system of political economy.
This is that's what we're talking about. Yeah.
You're in the UK, actually anywhere, get a VPN if you want to be able to access all sorts of perspectives. Miles, what say you to all that?
Well, as I said, I would certainly love that to be the case. I certainly do have my reservations, however. I think what is taking place there is absolutely fascinating within the potential global growth of stable coins. And I mentioned this concept of the singleness of money earlier, and to my mind, that's another reason why this whole Genius Act is so important, because if you strictly regulate domestic stablecoin issuance, you ensure that you do have that singleness of money between those different stablecoin providers, as well as cash, as well as bank deposits and so on. So it's got to be tightly regulated for that singleness. So that raises my suspicions, because I'm very, very wary of this this notion of this unified ledger, because it literally is, what they're planning there is almost like a balance sheet for every individual ultimately, including complete transaction.
The thing is that look, Miles, I don't take any of the pushback or the explanation. I don't share the same worries. Like, I don't know if Trump's going to win or not. I'll be honest with you. I don't know that he doesn't have to make a deal that allows for certain aspects of the old global architecture to survive. Like, it's not an either or thing here. Winning any war is going to be messy, and this is a war. This is a war for the future of money, for the future of humanity, for the future of individual nations and individual cultures. But at the same time, I look at who's close to the administration and who's not close to the administration to get you an idea of where I think we are. Larry Fink has been promoted to the high table of Davos, meaning he replaced Klaus Schwab at WEF. Trump is not interested in that at all. Trump went into he and Jamie Dimon both have gone into the WEF and basically, took a bag of poop, lit it on fire, and then, threw it up in the air and blew it away with a shotgun all over the audience. Like, they both did this multiple times. And I've been watching the key players in American financial and political space very carefully, because I want to believe this is true, that what I'm talking about is true, right? But at the same time, I have to sit here and go, well, it's a thesis, it's a hypothesis, I got to falsify it. And I've been watching it very, very carefully. I mean, Rich has listened to me, hundreds of hours of me going on about this for years, trying to decide, have I made a terrible mistake? Right? That wonderful moment in, every episode of Arrested Development. I've made a terrible mistake. And you do that by constantly watching the way things evolve. And the way things are evolving have continued to undergird that observation, that initial observation, that when the Fed started to tighten monetary policy against the will of the entire world back in 2021, we have been on this path ever since. And it's like the day Jerome Powell started the process of draining the world of liquidity and putting it into the reverse repo facility, which is my 5 basis points that changed the world argument back in June of 2021. Everything has, I hate to do the Emperor Palpatine thing, but everything has proceeded as I have foreseen. Because I looked at it and I went, oh, that all implies all of these things. And then I watched the American banking system say, these people want central bank digital currencies. They want you to own nothing and be happy. They want you to have to go to them for access to capital. That's what they want, ultimately. That's what the European Union wants, certainly. It's what they're trying to do, certainly. And they're trying to engineer a global depression, financial crash, in order to be able to then hand that off offer everybody that as a solution at the bottom when everybody's dying and gasping of breath. Everybody's gasping for air. That's their model. That's their plan. That's what they've always done. They've always crashed the world economy, sent us to war, done whatever pick your poison throughout history. They've always engineered these kinds of things, and then usher in the new system. That's what World War II was. Well, if we sidestep World War III by diffusing Russia, Ukraine, diffusing Israel, Iran, diffusing India, Pakistan, diffusing Cambodia, Thailand, getting rid of the drug cartels and the drug money flowing through all the intelligence, liquefying all the intelligence services, which is what Trump is doing, and you also replace that with a different architecture that effectively rebuilds Lincoln's greenbacks. Now, this is coming from a hard money guy. I've had to remember, this is, hardcore anarcho-libertarian, Austro-libertarian for decades. And I'm sitting here having to watch this play out, and I'm like, shit.
Yes.
We might actually be in a better position to have this than that, because we are not in a position today to allow for the deflationary impulse that would come from a fully hard asset-backed system. So you have to do one of two things. You either have to inflate the price of the hard assets and allow them to rise to then undergird and effectively be the collateral for the existing pricing structure of the world. I'll admittedly incredibly inflated, right? I don't like the idea that it costs me $30 to buy a goddamn pizza, but that's the world we live in, or $350,000 for a house, or whatever it is. It's either that or the societal disruption of a 75% deflation, which then leads to world war, and they get exactly what they want, which is then they can turn around and go, oh, by the way, we're going to reliquify the world, but you got to use these horrible programmable tokens that we control. And if you like meat as opposed to broccoli or bugs, well, sorry, you don't get to eat this week.
Yep.
And
okay.
that's I'm just understand that I see the architecture that the United States is putting in place. I see the worry about it, but that architecture leads us away from that system, not towards it, because they're being fought
Miles?
every tooth and nail by all the Larry Finks and the Christine Lagardes of the world.
Miles?
Yes, it's my
I know it's hard to take in. Like, I get it, but
this gradual incrementalism, and I recognise many of the tactics, which is kind of like, look over there, not here, and I think there's a lot of kind of pointing towards Europe and what's taking place there, because it's far more overt, and so it's very, very easy for Americans then to miss other things that are taking place, and of course the foundation stone of all of this is the digital ID, which is rolling out in the US as well, and that is that interoperable digital ID, which will ensure that this whole kind of tokenized system becomes a potential reality then. But I think what we do actually agree on there, slightly by and arriving at the same destination by different routes, is exit or strategies to actually deal with what we're facing here. And gold, Bitcoin, I think silver still has a lot of potential as well. And one of the reasons I think all of that is because they want to get all of these assets on their ledger, so they're almost incentivized to actually price people out and then tease gold, silver, Bitcoin, whatever, out of that audience and back into their own hands. And just going back to what I said about Larry Fink wanting to target the wallets around the world and get access to that crypto, clearly that's what they want to do. They want to bring all of that into the formal economy. And what we're seeing with metals now is a de facto revaluation, as far as I'm concerned, because that is helping to actually encourage people to sell, particularly in the context of the cost of living crisis, as they call it.
Yeah. Tom, hold on a second, because Miles, there's something that you said that I want to pick up on, right, which takes it in the direction of surveillance, which is you said that the digital ID is being rolled out in the United States. Now, the European Union and the UK have made it really, really clear that they want to improve our lives by giving us a digital ID so that we're able to get jobs and to stop people coming in illegally on boats, because without a digital ID, they'll sink in the channel, right? So of course, that will stop immigration. Of course. They won't. So, but you're saying that it's also being rolled out in the United States. How is it being rolled out? And what's in place?
Yes, they are using a very, very similar approach. I've actually done a video which actually looks at the UK's approach, which is largely by stealth. And of course, Starmer came out and was saying, oh, right, we're going to introduce this almost as if it was a card, in the same way. Going back to the whole 2020 stuff with vaccine passports, it was almost something you chose to download or you choose not to. So he was almost making it an optional choice, really. But the process is actually taking place via stealth. And so in the UK, many people have contacted me to say, oh, I've already signed up, and that is via the one login system in the UK. And in the US, they have something very similar called login.gov. Essentially, that builds that single unique identifier for an interoperable digital ID. And the sort of cherry on top there is the biometrics that they also want to take as well, which is where you do a selfie or it could be a sort of face scan, something like that via your mobile phone. And so the methods that are actually being utilized are very similar, and they're both using public-private partnerships in terms of actually moving this agenda forwards.
And login.gov is federal, at a federal level, not just state level.
Yes, I believe so. Tom probably know more than I will on that.
Yeah, if it's login.gov, then it's definitely a federal thing. So you'd have to have it'll roll down to the states if necessary. The thing is that we've chatted with Ian Burlingame about this. I don't worry about the panopticon. Like, I don't worry about that process. And I'll be honest with you, this is a maniacal desire for let me put it this way. In the immortal words of Wallace Stevens, "Oh, blessed rage for order, pale Ramon," from the idea of order at Key West. It's this rage that these people who sit at the top of the oligarch class, they want us to believe this two things. One, they're omnipotent and they're all powerful.
Yeah, I agree.
And two, they want us to believe that they can produce these systems that we can't possibly get around. I'm like, really? That's nice. There are all sorts of ways of us doing trade in and around and outside of their systems all day, every day, because people are ungovernable. And ultimately, their last mile program, the last mile problem of trying to get the last people underneath their panopticon umbrella is energetically so far beyond their capability of interacting with it doesn't matter. And ultimately, that's the thing. This is the part of the reason why I've been willing to, not to look at what's being built more generously than a lot of people. And that is not to say that the people who are, like yourself, who are bringing this to our attention are wrong to do so. I don't believe that at all. I think it's good that we have a whole bunch of people sounding the alarm about this stuff, and then there are people like me who will go through the entire process and go, yeah, but that's their system is completely unworkable. So why would I even, let's think about what it looks like if it's not being done for nefarious purposes, but it's actually being done because it's just where we're going to wind up going. We're going to wind up going to some version of that anyway. Because here's the thing. Every day we get up and these systems that we've created are so horrendously complex and so horrendously insecure that our identities at this point are so easily stolen, right? And these systems were built by the very people, right, who we now want us to have complete control. So of course it's the typical Straussian two-step of thesis, antithesis, synthesis. Hey, let's create instability so that people will then run towards our new version of stability. But I'm going to be honest with you, like, dude, I use Face ID on my iPhone. And and I do, and it's perfectly acceptable for me to make that decision with that technology, and for other people to choose not to, and to stay with a 6-number password or whatever, and never use any of the biometrics. My point being is that I remember doing a thing about 3 years ago with Matt Ehret and me on one side, and Ian Davis and oh God, who's the other guy? Riley Wagaman on the other side, and we were all discussing whether or not Putin was a puppet of the WEF, because the other side kept saying, well, he keeps using the phrase fourth industrial revolution. Now, in the hands of Vladimir Putin, and the word coming out of the mouth of Vladimir Putin, that means a completely different thing than coming out of the mouth of Klaus Schwab. It's the same phrase, but that phrase means different things to different people. It's like digital ID. And all of this means different things to different societies and different people. I'm almost like, okay, I worry about it, but I'm like, at the end of the day, I can't worry about it all that much, because 90% of the systems, the software is all bad. The systems are impractical. They need a sun to run the damn database, and they don't have one. So okay, well, that's that. And then we have to build the chips to run the sun. Doesn't make any sense to me. And so I'm actually more interested, going back to something you said about half an hour ago that I didn't know, which is that the Bank of England is talking about issuing a silverback currency, digital currency. That to me is
silverbacked.
Well, you know what I mean. It's going to be a silver, denominated stable coin. No. What a shock!
No,
go into that, because I want to drill into that for me, because that to me is a signal of something very interesting. So tell me more about that, because I really want to. I knew nothing about it. When you said it, I was like, I hadn't heard that. So, because it's very important for all of my thinking and all of my ideas that are sitting around popping out of my head.
Yes, so it's called a sterling stablecoin. There isn't much information although it was a week or so, it was maybe 2 weeks ago, I was looking at this. So, yeah, they call it sterling stablecoin. It's been announced by the deputy governor. It won't be silver backed. I can't imagine that, sadly. However, it's this notion of a kind of pound backing. Now, why are they doing? Why is the UK running this pilot with tokenized sterling deposits, remortgaging, and tokenizing that process, and tokenized bonds? That I find very interesting. I think what the City of London is trying to do there is ensure that it places itself as the foremost settlement centre for tokenized assets globally. I think that's what they're looking to try and do
Well,
to
the City of
maintain
London, they want to control finances globally. That's not like them at all, Miles.
Well, yeah.
Carry on.
So the rest of the world is choosing gold. The rest of the world is choosing gold, and the Bank of England is going back to the pound sterling. Think about that.
But what is so interesting
That's what I'm getting at.
In terms of the monetary architecture, is this all enables something like self-financing UBI to actually take place, where central bank money can be created, can be given to a private issuer of stable coins. They then buy that government debt that's just been created. They then mint the sterling stablecoin, dollar stablecoin, whatever they might be. They then mint those stable coins, and then they issue them to the recipients. So then, of course, when it comes to the spending mechanism, what they're really striving for here is the full kind of programmability, which will enable automatic tax deductions. So part of that tax deduction can then be used to service the actual debt that has just been created.
Yeah.
It's just absolutely wild, really.
No, it's just cutting out all the middlemen. So, like, again, it's just another central bank digital currency where this is part of the reason why my argument as to why I think the United States is not down with all of this is because as we talked about earlier, it was the commercial banking, small community banks that built the United States into the thing that it is today.
Yeah,
and then we have the international. Now we have the big international banks and the quote unquote too big to fail banks, but the too big to fail in 2008 was AIG. It wasn't Goldman Sachs. It was AIG. But that's what's led me into where I am today, which is that when I look at the most powerful political lobby in the United States, it is not the military-industrial complex. It ain't APAC. It ain't any of these people. It is the U.S. money center banks in New York. They're the ones that determine the flow of capital in the United States. They're the most powerful people. They're the ones who control the Southern District of New York. They control all of this. So nothing is going to happen in the United States. They're the ones who are the primary shareholders of the New York Federal Reserve. Therefore, nothing is going to happen in the United States that is not to their benefit. And ultimately, a central bank digital currency, as promoted by both the Bank of England and the ECB and the globalist cabal at large, cuts them out of the system. The two-channel monetary system, central bank lends to the commercial banks lend to the consumer, and there's two circles of money, right? This is the retail market that goes to and then there's the money that flows back and forth between the commercial banks and the central bank. You cut with the central bank digital currency, you do not need the commercial banks as the middleman.
Hence why I think they're going for tokenized deposits.
That's why I understand that. That's why I don't think it's going to happen in the United States, because I don't think the American commercial banks are going to stand for this whatsoever. And that's why we have SOFR today, and why we don't have LIBOR. That's why I think Donald Trump was brought to power in the first place, and I think that's probably the other reason why Donald Trump was brought back to power a second time around. Nothing happens in the United States without the banks say so. And the Democrats, and I watched the political situation here in the United States very carefully during the Biden junta. I refuse to call it the Biden administration. It was absolutely a friggin' junta. That their goal, and remember, Obama has never worked for the United States. I used to think he worked for the EU. He doesn't. He works for City of London. He always has. His job was to hand the financial future of the United States to London. And he nearly succeeded. And that goes back to why were Fannie and Freddie seized? Why were they put in conservatorship? Why were they held on? Why have they been held on ice for 17 years? Why was AIG bailed out as opposed to sold off for parts? Why? All of those, none of those things make any sense whatsoever. Everything that happened, including like John Corzine and MF Global and all of that stuff, every single bit of it, London benefited every time by further hollowing out the United States and shackling the American money center banks with unbelievably onerous capital controls, which starved the middle class of the ability to form capital. And I can go through Dodd-Frank, I can go through the underwriting rules for an average mortgage, all of it. It was all, none of it. The banks hate all of those rules. Wells Fargo hates them, JP Morgan hates them, everybody hates them. And they lost in the aftermath of the 2008 financial crisis. They got killed. Like Occupy Wall Street, the big banks, they all got turned too big to fail. We created the GSIB rules and all of this stuff. I'm not saying these people are good. They're not. Like, they've been rigging the gold market for years and everything else. But the point is that when America was going full globalist at a political level and was captured at the Federal Reserve level, banks could only just go along to get along. Like, you do what you do, right? Okay, so we can't make money with net interest margin banking, so we turn everything into a casino, right? But at some point, when we watch the moment where they start telling us exactly how they're going to, and I'm talking about the globalists, what I like to call Davos, when they came out from behind the curtain and said, this is what we're doing next, all the things you've talked about, and all the things that I think we're not trying to do. When you go back through this, they saw this coming, and they started the process of weaning the United States off of this. And this goes, and I could spend 3 hours going over this.
Yes,
so for
being an example of that.
So much of this, and this is, unfortunately, you're walking into like a 4-year conversation that Rich and I have been having here. So I don't disagree with all of your worries. I absolutely, I share some of them, right? And I think it's very important that we continue to highlight what they're doing right and what they're doing wrong. But the turn is, the fulcrum on all of this is, at the end of the day, the American money center banks would rather run the world and even if you don't want to be generous to them, you can say it's really simple. They want to run the world, no longer partnered with London. And that's a story that when you really start to think about it from that perspective, that fits, that little insight, that fits 90% of what we've seen over the last 8 to 10 years. And we're at the cusp of, what does Trump what are Trump and company trying to do now? And is some of it going to be implemented that kind of sucks? Absolutely. With no doubt in my mind. But at other times it's going to be, but there are other things that are happening that are also liberating.
Okay, Miles?
Well, I think financially, the Fed has long controlled liquidity, but London has long controlled the plumbing. So, I don't see a huge amount changing there, and particularly with London's position in terms of yuan settlement as well as a trading hub for that. And I think that they are positioning themselves, going back to what we were saying about tokenization as well, at the forefront of that movement. I
hate to interrupt, but I'm saying is that you bring up Hong Kong is really interesting, because I've been thinking about this a lot recently. We haven't talked about it publicly but I've talked about it privately with my partner Dexter White over Gold, Goats and Guns. And what we both determined months ago was that China's best move right now is to move on Hong Kong and take it early. Just tell the Brits, sorry, we're ending nope, sorry, we're taking it 12 years early. What are you going to do about it?
They've got to maintain Hong Kong because it gives them the legal standing for running, say, tokenized gold operations there, which they can then use as a settlement tool for trade with the Middle East.
What's interesting is that as of 48 hours ago, it became obvious that, or being leaked, that JP Morgan is moving their A-list gold trading desk to Singapore. Now, that would tell you, there's one of two things, the way to look at that. One, JP Morgan is looking at Washington DC and going, Trump's not going to survive. I need to cut a deal with London before they kill us all off. One. Or two, JP Morgan's telling Singapore, you work for us now. And that's going to be backed up by the US 7th Fleet, because that's what makes Singapore Singapore. Now, the reason why Singapore is because we had a containment strategy around China and the South and the Southeast Asia, and the Straits of Malacca have been our raison d'etre for having the US 7th Fleet in the region. But if that gets repurposed into taking to effectively, we're taking Singapore for real away from London. Because if you look around the world, Hong Kong, Singapore's, Dubai, whatnot, these are all places where City of London has established outposts, and they are now trying to figure out ways of getting, because they're liquidating London, like physically liquidating London. Now they need to move the center somewhere else. They tried to move it to Dubai, and this summer, all the events, geopolitical events, tell me, nope, sorry, not going to Dubai. So JP Morgan moving to Singapore, interesting. Like Japan normalizing monetary policy and allowing an actual nationalist to take control of Japan. That's another like stick in the eye to the City of London. I've been watching this really carefully, and I think Trump is in 100%. He is at war with London right now.
Yeah, Miles. One thing I would
5 or 6 different vectors.
I've been fortunate enough to have Tom on my channel for many, many years. I think before the Brexit vote, we've been doing videos regularly. And one of the things I have learned from Tom and tracked, that he is able to see these signs or whatever long before, and like pick out the sort of red flags and say, okay, this is the direction of travel. And more often than not, it turns out that way. Now, maybe I've forgotten all the times he's been wrong, because then I get to confirm my own bias, right?
Fair.
And
but when you throw out as much crap as I do, like you're going to be wrong about. But you're going to be wrong about 25 or 30% of stuff. You can't help it.
Yeah, and I do enjoy Tom and learn from him. So there is that. Anything you want to say about what Tom has said? Anything you want to add to the conversation? Anything we haven't covered?
Well, I think the big buzzword is, of course, that of tokenization. That's what they're really moving for, and you can see that with the American banks. You can see it with the British banks. You can see it with, say, the BIS Project Guardian taking place.
No, just on that, you mean tokenizing people's houses, assets, gold, silver?
Yeah, so where this is starting is going back to the UK pilot as prime example. There is tokenizing bank deposits, so tokenizing privately created money. So that is the banking digits. And what's so significant about that is that from the front end, you will not notice any difference. And at the same time, they are also, of course, pioneering these stable coins. Now, there's 3 elements to the pilot running in London right now, and this is taking place with 6 major retail banks of the UK, so your HSBC, your Nationwide, and so on. And they're also looking at the remortgaging process, which will require digitizing title deeds on one hand, and then tokenizing the mortgages. And so mortgages, of course, alongside sovereign debt, are the collateral that backs the whole system. And so going back to that principle of singleness of money, what they're looking to do is ensure that you can actually use mortgage token debt to actually pay for your everyday transactions, in the same way that you'll be able to use government debt, in the same way you'll be able to use stable coins, tokenized deposits, or even central bank money. So it's a multi-money system that is being created. It's just like financial wizardry. It's
but wouldn't that be inflationary? Because people have all these different ways.
Rich, if you just think about the actual velocity of money that can actually be exerted by digital forms of money, and you see that with the kind of cascades within the crypto market, for instance.
Yeah.
So yes, the velocity of money will therefore increase. So they're going to have a lot to deal with in terms of inflation if they actually manage to implement this system. But as I said earlier, it all depends on getting that critical mass on board for digital ID, really, because otherwise they can't introduce this in a widespread system. So that's absolutely fundamental. And then the third area of the pilot is the bond settlement or wholesale bond market. And yeah, that's the initial phases. But what's so significant about all of this is that it's built for mission creep ultimately. So the idea is to, as Larry Fink has said, move towards tokenizing everything. Now, I would love to see examples in the US where they're saying, no, we're not going to do tokenization. JP Morgan, you can forget that. That's not going to happen. Same with money market funds being tokenized in the US and so on. Obviously, time will tell.
It will. And again, and it's also going to decide on what the rules are and how those things are tokenized. And that's going to be interesting. Don't get me wrong. It is going to be interesting. And but the ultimate goal is to do away with that system. And this is, I think it's very clear that Trump is pushing a world of tariffs and mercantile and basically market access charges around the world, and that's what he wants to do. We've had it done to us for years, and it's forced the capital out, the actual capital out, not the working capital went out in the form, and we got cheap depreciating consumer goods in return, and that we can't. That's a world that we can't survive that as a country, and we haven't been acting as a country for quite a long time, and that's going to be the interesting part about what happens next. And I think a lot of things are going to get tokenized, and that's there's not going to be any way around that. But I also think that there is not going to be a 100% digital economy either, because I don't think cash is going away.
No, I think people will find something to transact with, even if
they always do. They always
do. Like mackerel tins in prison.
Always existed.
Yeah. Governments are good at two things: killing people and creating black markets. Mm-hmm. pretty much nothing else.
Miles, I want to make a point that something struck me, and then I want to ask you something, and then we're going to need to finish up, right? So when you mentioned UBI, it suddenly occurred to me, and this is more a domestic issue in the UK, but it could also be rolling out in the European Union, which is the recent budget, where people who aren't or somebody with 5 kids on benefits is £10,000 better off a year, whereas a single person on the average salary is now £1,500 worse off a year. Mm-hmm. So then people who are working are going to get poorer, and people on benefits, well, they're going to get uplifted. And who has 5 kids? It's not local settled Britons. It's not English people and Christian people, white people, right? Generally. So it's favoring this new group of people that are arriving, making the working people poorer. And the way to equalize it, because the working people are going to be suffering, is, okay, well, we're going to give everybody UBI. So then the working people aren't going to object, because they'll think it's going to uplift them. And those on benefits, well, they're already doing well anyway, so they'll take UBI.
This is synthesis. It's thesis antithesis.
So we'll take UBI,
over and over and over again.
In order to have UBI and prevent fraud, we need to have a digital ID and a biometric digital ID and a wallet and a CBDC. So I saw how all that is connected. So thank you very much. But one of the things that I'm not clear about, and we've only got a few minutes, Miles, is how the CBDC in Britain and the one in European Union is going to intersect and interact with international currencies. Who the hell is going to want the British pound? Britain has nothing. We've destroyed the hydrocarbon industry.
Yes, well, a couple of points. Firstly, just going back to what you were saying about UBI, just imagine if they managed to make this tokenized system work at the government level, the amount of austerity that would then be able to actually generate by using AI to effectively replace civil servants, statisticians within government, and so on. That is going to be quite significant, I would imagine. And so then moving on to your second point, yes, essentially, when you're dealing with a token, you are dealing with a permissioned access to an apparent asset. So it's all based upon the permissions. So they can actually easily ensure that there's capital controls and that the systems don't interact at ease. Now, in addition to that, given what we were saying about stable coins, of course, I don't know whether this has been confirmed, but I did see talk of it. I'm not sure whether it was it's actually going through, but there was a proposed $20,000 limit on US stablecoin holdings in Britain, and that's obvious because they want to make sure the the pound and depositors within the banking system, hold money within that closed system that they're trying to build. So yes, and they want to minimise that capital leakage. Yeah.
Well, there are decentralized exchanges. So,
well, yeah, no. I mean, when I saw that,
anyway.
when I saw that, when I saw the note that the BOE was going to limit stablecoin, the U.S. dollar stablecoin holdings, I'm like, well, that's interesting. And yeah, the capital controls are coming in Europe far faster than they are here in the United States.
Yeah,
I mean, if anything, the United States is opening up the only thing that we're allowing to immigrate into the United States is offshore capital. Like we're stopping the people at the border, but the money can come in. And the money's going to come in, I think, in the form of, again, tokenized deposits from overseas. Those sovereign wealth, the money from the sovereign wealth funds, and all that stuff that's being negotiated by Trump is all coming into the United States. It's going to be deposited in local banks to produce local projects to rebuild rebuild Main Street. That's what I think is happening, and we need an infrastructure to be able to handle that capital flow into the U.S. and sterilize it in many ways. And that's part of the reason what the stablecoin market is also meant to do as well, in order to minimize the domestic inflation while it gets done. And this is at a risk of sounding a little too much like the editors over at Zero Hedge. Everything is either, in their minds now, everything is either QE or QT, because that's what sells advertising anymore to libertarians who don't understand monetary policy, even though they think they do. Like that's a form of QE. That's a form of sterilized QE. It's not QE, but it's a form of sterilization, similar to what Bernanke did during the QE years, which was to recapitalize the banks by making us, the taxpayers, pay for it all. The reverse of that is what's happening. Again, everything that I'm seeing within the United States banking system right now, and what the Trump administration is trying to do, what the banks are asking them to do, and what needs to be done, is happening in order to liberalize credit flow to the middle class, not to the oligarch class. It's actually being devolved back to the middle class, and it's very important.
Which is the opposite of what the European Union and the UK are doing,
right? Because you see, if you look
Tom,
at,
we're gonna have to finish up.
That's fine. I just wanted this. So my last point to say is go back to what I said earlier about 2008 and Dodd-Frank and all of that. That was designed to disadvantage, and Basel III and all of that stuff. It was all designed to further disadvantage American banks, which are more competitive than European banks at every level. It was all done, and we implemented some of it, and we've said, and the United States finally said no to any more of it. And the Basel III endgame has fizzled, and now what's coming next is, we're getting rid of the SLR, the supplemental leverage ratio, meaning our big banks don't have to hold reserves against their risk-free rate, their risk-free holdings, which are their treasury debt. We have to do that. That was in no way, manner, shape, or form an American first political class put that restriction on American banks to disadvantage them against European banks. No, that was legislation written by Europeans or Britons in order to disadvantage us and to bring everybody low. If you watch everything that has happened in our legislative agenda since the end of World War II, you will see that we suffered everybody putting tariffs on us, and we don't put any tariffs in order to slow us down, to allow you. Now, for the first couple of years after World War II, fine. 80 years later, those same tariffs are in place. Yeah, go fuck yourself. Like just to be blunt about it, and getting rid of the supplemental leverage ratio is another GFY. It just happens to be a technical way of the bank saying GFY. We're going to start lending again, and when we start lending, and the money's coming into the country that Trump has negotiated for, I don't know. I wouldn't call that colonialism. I would call that the liberation of the capital starved world that we've actually had, where we've been financializing and watching people get fabulously wealthy and financializing the eating of the corpse of the old world, which is what's been going on, and rolling all that what capital is left of into the oligarch class, and it's now the beginning of a democratization of capital from them to us.
Yep.
That's what's and if it has to be done through some mechanisms of tokenization. Yeah, it's a big shit sandwich. We all have to take a bite.
Yes, we shall see about that, Tom. We'll see how it rolls out. And 80 years is nothing for the City of London. They've been playing this game for hundreds of years.
Oh, I know. They've been playing this game since 1694. Yep.
Yeah. Miles, anything you want to say to finish up?
Well, Tom mentioned Basel III there. I think that's a very interesting element as well, because what that's also incentivized is, of course, the East to move towards gold. And that's been highly successful in terms of ensuring that they really do develop their physical collateral.
Yeah, and
Tom,
to
Tom,
understand that.
Tom,
Okay, never mind. Sorry,
Tom,
this is a
Tom,
conversation that go on all night. Sorry.
yes, 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 yes.
Good.
Miles, do you want to say where people can find you?
Yes, I'm on YouTube, I'm on X, and Substack actually. So yeah, if you just put in Miles Harris, I should come up there.
Great. I shall put that in the description below. And Luongo.me and TFL 1728 on X.
Yes, sir.
That's right, etched on my heart. And for people watching this, and also for you, Miles, you should need to subscribe, comment, and like, because one of the things that I'm covering a lot is the influence of the City of London on geopolitics, which I think is a little bit up your street. What's really going on? All right. Miles, Tom, thank you so much. This is Rich. This is Miles signing out. All the best. Bye bye.